Hello traders, the title of the video is how to combine a CCI indicator and trading volume part 3. So the first part of this video is the most important part of this series of video. I recommend to traders to watch the full length of part 1 so they may understand everything. So the first part was 27 minutes, the second part is 15 minutes. Alright, now this is part 3. My intention is to keep this tutorial under 10 minutes because I have said enough in part 1 and part 2. Now we are talking about part 3. Very simple but also powerful, and I will try not to repeat myself to please traders that are more advanced. Alright, so when we are looking in part 3, we are looking again for a surge in trading volume. So if you have any question, it means that you have to watch the full length for part 1. Alright, any question that you have in this tutorial, you need to go and watch part 1 or part 2, and then you understand everything. So there is a surge in trading volume here. So in part 3, we are looking for a surge in trading volume, and this time we are looking for the CCI itself chart pattern. We are not talking about the price chart pattern, but we are looking for the CCI chart pattern. So the price form, we have a surge in trading volume, and the CCI is exhibiting a double bottom chart pattern, which is a bullish chart pattern. So at that point in time, we have a bullish trading setup on a daily chart. So you say, George, I'm very happy because you are now on a daily chart. You always stuck on the monthly chart. And I will say to you, it's better to use the monthly chart than the daily chart. For this demonstration, I'm using, I'm using the daily chart, alright? Okay. So surge in trading volume followed by either a bullish chart pattern or a bearish chart pattern. The patterns that I'm recommending to traders, either a double bottom chart pattern for the bullish trading setup or an inverted head and shoulder chart pattern for the bullish trading setup. For the bearish trading setup, we see a surge in trading volume followed by a double top or a head and shoulder chart pattern. We are talking about the CCI itself exhibiting either a double top or a head and shoulder chart pattern. Because the CCI is mimicking the price, you are likely to recognize the CCI its own chart pattern, not the price chart pattern. Surge in trading volume plus a CCI bullish chart pattern is a bullish trading setup. Here it is. So in all cases, we use a top-down trading method to trade it. You want to buy, where do you buy? You buy at the support level. We talked about it in part 1 already. So the price is here. It gap up from here to here. This is a key level. Whenever the price gap up from one point to another point, that point is a key level. So in fact, I talking about gap trading method at Dayprotraders.com. It's a key level where the price gap up to is also a key level, and also the media line of the gap itself is also a key level. So you can see that it's a key level where the price did gap up from. This is a key level. This is the point where the price gap up to, and this is a key level. This is the media line of the gap. So at that point in time where we have that trading setup, that bullish trading setup, the price was at the media line of that gap. You remember? I don't want to say it again. Check part 1, part 2. I talk about everything else that we need to check before we apply this strategy. So I will not say it in this tutorial. So if you are watching the third part without watching the full length of part 1, probably you are missing out. And you implement a different time frame method, different time frame trading method, without cutting corner, meaning that checking the fundamental economy news and so on. You are a daily chart. Look at that. And here it is, boom, up. It worked beautifully, yes or no? It did work beautifully. Another example, my friend, how a surge. Okay, you can see this one. This is a surge. Okay. It's a surge in trading volume above average trading volume. I am under a time pressure. All right. Okay. the CCI. After that surge in trading volume, we are looking for either a bearish chart pattern or a bullish chart pattern for the CCI itself. If it's a bearish trading setup, we'll implement a bearish trading strategy, looking for the opportunity to sell using a top-down trading method. If it's a bullish trading setup, here it is for a gigantic double bottom chart pattern after that surge in trading volume. So we are now here, you see. While we have, you see, so there was this surge in trading volume first. Now the CCI forming a double bottom chart pattern. Traders who are applying this strategy, professionals that are applying this strategy, they come. Now again, we have a surge in trading volume at the point where we are about to buy. So we are not the only one buying. So more people came in here and bought the stock again at that point in time. As always, bullish trading setup will be where? At the key level or at the support level. This was a key level. Why? Because that's where the price gap up to. So now we have another trading setup at the key level, at the support level. So it breaks above it and find the support here. It's a support. It went up. So we bought it here. It went up all the way here. Now it pulled back to retest it here. Now we have again a surge in trading volume and the CCI forming a double bottom chart pattern. Did it go up? Yes. You will implement a top-down trading method to control the risk. If it's a bearish trading setup, we will use again a top-down trading method to sell it. A surge in trading volume, a double top, that's a bearish trading setup. A surge in trading volume, CCI exhibit a head and shoulder chart pattern or any bearish trading setup, that's a bearish trading setup. Remember, when we have a bearish trading setup, it doesn't mean that definitely the price will go down. It just tells that there is a high probability that the price may go down. That's why we use a top-down trading method to control the risk. Sometimes you may see a bullish trading setup following the correct procedures, the correct rule, but the price may go down. And you may say, what's going on? So if the signal fails, just come out. So this will conclude our discussion about part 3, how to combine CCI indicator and trading volume. All we are looking for is there a surge in trading volume? Yes. After the surge in trading volume, did the CCI period 14 exhibit a bullish chart pattern or a bearish chart pattern? If yes, we implement a top-down trading method to trade it like a pro. If you want to understand more how to polish this strategy, watch the full length of part 1, watch the full length of part 2, so you may avoid all the biggest trading mistakes without cutting corners. If you have any question or suggestion, please put in the comment section, and in due course, I will be recording another video to answer your specific question. Generally, I use the monthly chart. This time, I'm using the daily chart. This strategy is valid on any time frame, but when we are applying it on a lower time frame, like 5 minutes, 50 minutes, 10 minutes, we are playing with the market noise, and it may not be as solid as it should be on the monthly chart or quarterly chart or yearly chart. Just remember that for day traders, at least use the daily chart to find this trading setup and then implement a top-down trading method to break it down to your lower time frame. For scalpers, all right, at least use the 2-hour time frame to identify the trading setup and then break it down to your 3-minute time frame or 5-minute time frame. That would be a better way to use it instead of going straight away to the 5-minute time frame and looking for this setup and doing it on the 5-minute. So on the 5-minute time frame, you just go and say surging trading volume on the 5-minute time frame, bullish chart pattern are buys. It may work. Some of them will work, some of them will fail. That's why we recommend to traders to use a higher time frame and break it down to a lower time frame. You are more likely to catch a better, price move, whether you are day trader, swing trader, or a position trader. So if you have any question or suggestion, please put in the comment section. You have any suggestion, put in the comment section. You say, Joe, you have been talking too much about CCI. I want you to talk about defensive stock. I want you to talk about island chart pattern. You have any suggestion, please put in the comment section. I have a book here. Can you hear that? Right? I write everything down. All the things that they are talking about, I write them down, and I will be recording videos accordingly. All right? So if you have any question or suggestion, put it in the comment section. I'll read them, and in due course, I will record another video to answer your specific question. All right? This video has been truly useful to you. Please let us know by giving us the thumbs up. If you think that it's a useless recording, please mark it down. That will force us to go back to our YouTube creator board to improve our next recording. All right? However, if you think this is an essential tutorial or an amazing recording, feel free to share it with your friend on Google+, on Twitter, and also on Facebook. Are you a subscriber to this channel? If not, please subscribe to our channel today and make sure you click on the notification bell icon so anytime we record a video, you will be the first person to be notified. You can decide to watch it or not to watch it. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to combine CCI indicator, trading volume, part 3. So this will conclude this series of video, part 1, part 2, part 3. First part was 27 minutes, second part was 15 minutes, third part is 11 minutes, so all right, short form tutorial. I hope you have enjoyed it, okay, and we'll put it to use to improve, okay, your CCI and volume bar trading. Until the next time, enjoy yourself and be very happy. Happy trading to you all, and I will speak to you soon.